Good afternoon, everyone. Welcome to Banao Bharat's Trading for Living Wednesday live session. Another narrow range day. Yesterday's close was exceedingly good. There was fantastic pullback in the market after having taken the support at around 18,700, and the way it had closed with such a positive bias, it should have taken out new high today at least, but still it has still not taken out. But then the structure of the up move has not changed. It is still closing positive for the day. Nifty is about 35 points in the plus today. On the spot it is about 48 points, and Bank Nifty is trading above 100 points on the spot and around 80 points on the futures. So what did Nifty do since morning? Well, it opens at around 18,880 around yesterday's close and slightly goes up for just about 2-3 candles, not a big movement, but it stays on the positive trajectory up to 18,909, just about from the opening candle high, you would say around 20-30 points only, which means for 4 candles it moves about 20 points, which means the up move was very slow, but still it continued to maintain the upward trajectory of yesterday. After that it loses steam and comes down. Having come down, it doesn't go much far and makes a level at around 18,828, currently trading at the day's high of 18,900. The way it is closing today, it is in spite of global cues being negative. The way Nifty opens higher, slightly stays higher for some time and then comes down. While coming down also, it doesn't crack too many levels and once again it goes back towards the day's high, is an indication we are very much in bull market only. Yes, based on the data pattern, there is a small resistance at 18,909, which is day's high on the intraday chart, which is valid only for today. So today it has come up to 18,905. After that it came down. If you see here, this candle shows a high of 18,905.5 and at around 3 o'clock it came to 18,906, but still it did not cut, which means it is not ready to fall down any further, and probably this intraday resistance and breakdown level is getting nullified by tomorrow morning. And today, because the data or the price action has not once again come to the day's high, it is a positive indication for tomorrow, which means tomorrow there is all the possibility of witnessing one new high again. By the time tomorrow when we see the chart, it will be it had come down from 18,955 all the way up to 18,712. From 18,712 it came up to 18,909 and it is moving in the sideways region. So this today's movement will be considered as sideways movement for tomorrow's breakout. It has gone up, it is consolidating. While consolidating, it didn't make any sellable levels. It is consolidating on the higher levels, and tomorrow if it breaks up, then positively we will have a good move on the upside tomorrow. So that is with respect to the Nifty chart. Bank Nifty also very similar. Yesterday it had a fantastic close at around 43,870 from the lows of 43,450. So almost 450 to 500 points. There was a pullback yesterday. It has taken good support at 43,450 levels. From there on, the pullback was genuine and it was accompanied with very good buying. That is why the close was exceedingly good at the higher levels. Today, in continuation with yesterday's close, it opens higher, but it doesn't stay higher for quite some time and continuously comes down to make a new higher low at 43,775, currently trading at 43,930. It has shown intraday high of 44,026 and it has shown an intraday low of 43,775. About 250 points intraday range, which will be considered as a sideways movement, and hopefully for tomorrow's trading, today's high will be taken out and Monday's high of 44,124 also will be taken out, and 44,234 was last week's high. Yes, Bank Nifty stands at 44,545 was the new yearly high for Bank Nifty, but we haven't yet seen new yearly high for Nifty. We will be seeing it soon. Will it sustain above that or not is another matter, but first thing is we have to reach there. Only after having reached there, with what kind of volumes and what kind of robustness it goes higher, will determine the further course of action. But for now, there is all indication that both Nifty and Bank Nifty will continue to do well in this week, and probably one more attempt at lifetime high will be made within this week itself. Tomorrow being a weekly expiry, if there are too much of negative cues on the global markets, then the party may have to be postponed for a little while. But for now, the way it is looking, at least our Indian markets, there is no signs of any weakness. Yesterday we have seen some weakness in US markets. US markets have closed in negative. In spite of that, today's our movement, we are closing in a slight positive, is an indication no matter where the price action, whatever happens, the price action of our own markets are important for us, because our markets moves based on the positions that are already there in the market based on certain anticipations. So please remember, even though you see any other indexes, do not trade based on those index. There were times when people, or even now they do that, people look into FII data and then they decide buy or sell. People look into crude oil overnight and then decide buy or sell. People look into SGX Nifty in the morning and then decide buy or sell. People look into US markets in the evening and then decide tomorrow morning our markets also will gap up or gap down or move up or move down. During the day, people will want to watch European markets and then take a call where else the market might close by 3:30. Instead of doing all of these things, all of these information, somebody else is doing it and they are reflecting all of those action in price. So instead of you again looking at other data points, you just look at the price and price will tell everything. That is much more easier for people like us with limited information, knowledge and resource and skills. It is always better for us to just follow our own price action. If you are watching, or if you want to trade Bank Nifty, just watch the Bank Nifty, don't even Nifty. If you are watching Nifty or trading Nifty, just watch Nifty and nothing else. Or if you are trading in any of the stocks, maybe SBI or Reliance or Hindustan Lever or any stock for that matter, just have your complete data points on that stock alone, irrespective of where the overall index is going or irrespective of where the overall sector is going. That way you will not be tripped out of your trade, because the moment we see more data points, there will be conflicting signals and you will hesitate to make a clear decision. Or else, if you want to include all of those things, then include those also as a parameter in your overall study itself. If the stock is showing a bullish signal and if the sector is showing a bearish signal, then take a view, I will trade the stock with lesser quantity. I will put lesser amount on the table, something like that. Otherwise, don't even include. If you want to just trade on this thing, just trade based on your own data points. That will always give you some returns, because all the market participants not only are watching the data, they have so many other interests in this. It's not just about the data points. There are so many other factors other than the data points that are playing on the markets. That being the case, we cannot look only at US market or FII data flow or SGX Nifty and then decide or come into some kind of a conclusion, which may not happen that way, because our own dynamics, that particular script, every script has its own dynamics. For example, Nifty or Bank Nifty, you can see yesterday people have carried the long positions home. Towards the end, the way index closed, it was very clear people have carried the positions home on the long side. Yes, which also means shorters also would have carried the positions, but this is after certain range, shorters will have to cover, and that will propel the prices on the higher side more, and it will not just because shorters are there in the market, it will come down. This time after certain level, buyers will have more conviction. When you have more conviction, you will hold on to the positions and you will not give up your positions even if it comes down little bit. So that will force the short sellers to go ahead and realize bulls are strong and they will have to cover the positions and they have to double up their positions on the opposite side. That is how the market price actions always keep going up or down. So these are the information that you have to learn in your trading activities. These are very critical information for daily trading people. If you want to become a full-time trader, there are certain mechanics that are important that you should know. Without that, you will not be a good trader even after spending many years in the market. What are those data points or what are those key aspects that you as a trader should know? If you have to really learn them, then contact us for the bootcamp or the mentorship program, then we will be happy to help you. If you are liking the content on Banao Bharat channel, do subscribe to the channel and share the channel with fellow traders. Let us once again meet tomorrow for the expiry session. Until then, Om Swasti.